So one thing I hear really often is clients confusing their business's profit with the balance of their bank account. And they think that there's not a lot of money in my bank account, therefore I haven't made a lot of profit, therefore I shouldn't need to be paying too much tax. What happens then is their tax return is done and their income is much higher than they thought it would be. The amount of tax they need to pay is much higher than they thought. And they're like, why is my income so high? Where has all the money gone? I don't have that much money in my bank account. Where's it all gone? Why? The problem is that the two concepts are very, very different. The amount of money in your bank and the amount of profit you earn are not the same thing. For example, if you take money out of your business bank account for personal use, you shouldn't do that. But if you do, it affects the balance of your bank account, but it's not an expense to your business. If you put money into your business, contribute money in, very, very common thing to do, it's not income, but it does affect the balance of your bank account. If you have a supplier that you owe money to, it can be an expense, but it hasn't affected the balance of your bank account yet because you haven't paid it yet. If you have a customer who owes you money, it can be income, but it hasn't affected the balance of your bank account because they haven't paid you yet. It will later when they pay you. Bigger example, let's say you need to buy a new vehicle. It's 100% business use, trader ute, whatever it is. In the current tax law, as it stands right now, is that under certain circumstances, you can claim the cost of the vehicle in full, as long as you meet certain criteria. That's potentially a $30,000, $40,000 deduction, reduces your business's taxable income. But maybe you've bought it on finance. Maybe all you've actually physically spent in cash is a $500,000 deposit. So your bank account has only changed by the small deposit amount, but your taxable income has changed by a huge amount, the cost of the car. So you can see how, especially over time, the two things can become very, very different. What you need to keep an eye on your profit of your business over time, and you absolutely should be doing this in real time as you go throughout the year, you need software. You need accounting software. Xero, QuickBooks Online, MYOB, they're the three big ones. You can use Excel if it's done properly. I've seen it done not properly many times. If it's done properly, it can be done. It's not necessarily the best idea, but it can be done. But you need software. You need to be keeping a track of your business's profit as you go in real time. If you want any help at all with this, if you have no idea where to even start with this, hit me up. I'm absolutely able to help you. I would love to help you. This is one of my favorite things to do. Let me know.